This is a session co-hosted between the Climate Bond Initiative and First Abu Dhabi Bank. Um, I would like to introduce our panelists, and let me start by introducing Sean Kidney, the CEO of Climate Bond Initiative. Then we have Helena Viñes, who is the Commissioner of the Spanish Financial Market Authority and co-reporter of the EU Platform on Sustainable Finance. And then we have my very good colleague, Rula Al-Qadi, who's the Managing Director and Head of Group Funding at First Abu Dhabi Bank. We all know that the world needs to reach net zero by 2050. And in order to get there, we need to decarbonize and we need to accelerate the green transition. And in order to get to that point, we need financing. I think that's very obvious. A lot of discussion that has taken place over the past 3-4 days has been about how can finance contribute to the transition. So today we will try to discuss that, what it will take to scale the sustainable financing from a regional perspective. So before we kick off, I would like Sean to make a presentation about what is the starting point and what are the challenges and in order to reach from that perspective. Sean, over to you.
Thank you. Thanks very much. I've got a short PowerPoint for you. I'm going to flick through it, if I may, about what's going on. You kind of know the challenges, as you just heard. You may not appreciate the capital that we have to invest to address what's being talked about in these halls around us. This is a McKinsey's report, which talks about globally $9.2 trillion to be invested per annum going forward. And we're currently at about 1.2 trillion to 2 trillion. So we've got a massive scaling up. And that's just a mitigation. In this region and in Africa and South Asia, we have to now look at resilience because climate change has started. We've lost the fight to stop 1.5. We're now targeting 1.5, hoping that we can get temperatures back down again in about 20 or 30 years with direct air capture. So we've got a lot to invest in that. We also have to invest in preparing our societies for the constant climate shocks that will now become normal. So think about the floods in Pakistan, the drought in Sichuan, and think about that happening every year around the world, especially in the most exposed countries. And where would they be? They're in MENA, they're in South Asia, they're in Africa. So resilience as well, that's the challenge. The good news is that we've had some wins. We now do have all the rich economies of the world committing to not just 2050 targets, but 2030 targets, which is what counts. 2050 is the end goal, but if we don't make the milestone of 2030, 50% reductions, we will not get to 2050. The societies as we know will not exist. Life in Abu Dhabi will be impossible. Summers will be 60 degrees Celsius for months on end. All the buildings will have to be rebuilt, but probably people will have to depart, leave the country. And that'll be the same in lots of hot places. We will have to abandon large swathes of tropical zones on Earth. That's how bad it is. And we will see mass death. But if we can get 50% emissions down by 2030, our 2030 target, we have a good chance at turning the corner. But we have to prepare. Now, the good news is, if we invest this much capital, this is economic stimulus. If we do it right, this is a bit like a Keynesian stimulus on the planet, growing our economies, growing wealth, if we can get the investment right. The other bit of good news is, despite this vast amount of capital, we have the capital. We now have more capital on the planet than ever before in history. Of course, it's in the wrong place. It's in places like German bunds or Japanese investments, but it's there if we can figure out how to get it. And we know that if we create green products, they invest. We've got a proof of concept. This market for green and social and sustainable has been going crazy. It's the fastest growing asset class on the planet because investors want to move their money to places that are green and social. Now, there are some rules, as any good banker will tell you. You can't create products which don't miss people, which don't fit the risk yield profile of investors. So that's a minimum. So these are ordinary green bonds, that have the same profile as a vanilla bond with a bonus feature that they address climate considerations. Critical sales point. If we can't make that work, it doesn't work. We can get the risk yield requirements through blended finance, through rich country guarantees, through all sorts of things. It's working, is my key point. But of course, in this region, we need to do more. The amount of issuance has been relatively small. Of course, 2021 was a very good year, and 2022 is not yet over. I'm counting on a lot in December. I'm sure First Abu Dhabi's got some deals they're going to bring to market. We need to now see consistent growth to be able to meet our challenges in the region. And we are going to be working this coming year at Climate Bonds with First Abu Dhabi Bank, National Bank, on creating a market in the region, not just MENA, but also across the Islamic world and Africa as part of this project. We have partnerships all over the area that have been developed, including with people like Dubai Ministry of Economy. We're announcing in a couple of days green sukuk guidelines, which have been reviewed by Sharia scholars as a way of promoting green sukuk. Unfortunately, we haven't seen a lot of green sukuk in the region. They've mainly come from Indonesia and Malaysia, but the time has come for these things to grow. Taxonomies have become a critical guidance for what qualifies. We need, and we have been developing science-based guidance about what qualifies as a green or a social resilience investment, bringing together expert groups. We did the Climate Bonds Initiative in 2012, and then at the Chinese government in 2015, and now with the European Commission project in the last few years. And Helena has been working with me, who will talk in a while, about this important initiative of creating regulated guidance for what qualifies. And we've seen an announcement from UAE regulators that there will be a taxonomy developed in the UAE to be announced at the Abu Dhabi COP next year to provide guidance for the region of qualifying investments. Critical points. This is science. This is not what our leaders think can be required. It's what our climate scientists say we must do. After that, we'll have to figure out the economics. That becomes the second job. It's not what we can do, it's what we must do. It's a shopping list for the future. Think of it that way. The idea of taxonomies has gone global. We now have taxonomies appearing everywhere, including, as you say, in UAE, and Egypt has been developing one. We have looked at not just what's green and sustainable, but transition investments. How do we take companies or investments that are high carbon and shift them with appropriate ambition, commensurate with our targets, to become low carbon? This is one of the things that is a source of discussion in the UAE, with different companies looking at what they can do. And enabling investments. Grids, for example, we consider an enabling investment. We have to quadruple electrification of the planet by 2050. Transmission grids are part of that. Critical minerals for the transition, cobalt, lithium, these are enabling investments. You get a sense of where the taxonomy conversation is going. And resilience, I mentioned before. We need deeper understanding of what are the right kinds of resilience investments to make. Not just physical, but social, economic, and of course, ecosystem. 5, we're saying we need to see a global market in the debt space of $5 trillion a year per annum by 2025 if we're making a real contribution. At the moment, it's about to hit $1 trillion a year. So we've got a long way to go. The steps we're taking, we need to understand what to do. That's what taxonomies are. That's what credible green definitions are. We need to, in that process, ensure that we understand the right kind of transition and transformation. There are many talks of transformation which were not ambitious enough. There are dead ends here. Get our scientists in the room. It's not an industry decision. It's not a banker decision. It's not an NGO decision. It must be a science decision of what needs to be done. We need to make sure our policy supports the transition and these investments. There are regulatory measures. For example, in Dubai, we now need to be considering building standards for buildings to survive 60 degrees Celsius heat on an ongoing basis. That's to change the building standards. But of course, we need to look at transport, the electrification of transport, how we get rid of every petrol-based car quickly. Well, it's going to happen because the Chinese are driving down the cost, but we can accelerate that. How do we transform our industries to become future fit rather than built for the 21st century? We have not done very well. We've got a lot to do. Above all, though, we have the investor appetite. We've managed to get all the world's largest investors saying they want green, give me green. That's good. That makes First Abu Dhabi's job much easier. But we have to grow the pipeline because a lot of those things are stuck in planning bottlenecks or bankability challenges, or they need support like guarantees from rich countries. There's work to be done to grow that pipeline. And we need a special focus on growing emerging markets. 70% of the capital investment we make in the next 30 years will be in emerging markets. We have to make sure that it's green and it's not brown. Otherwise, we will have no future. So that bridge between the sources of capital, largely in the richer countries of the world and in the Gulf, and the places where the work has to be done, has to be made. That is a banker's job. That's why we're partnering with First Abu Dhabi National Bank. That's the presentation. There has been some issuance. The Islamic Development Bank has been pushing on green sukuk in here. We've seen Aqua. We've even seen the PIF in Saudi issue a green bond recently, which we're a great supporter of. Egypt, of course, has done a sovereign green bond, very successful, and will do more. We've also seen sovereign bonds from Indonesia, from Nigeria, from other Islamic countries, but it's a drop in the ocean. It needs to be a lot bigger. That's going to take energy. This is important for the economies to start grappling with what's got to change, because I'm going to tell you globally, a tsunami is coming. What we consider normal investments based on past performance will no longer be normal or successful investments going forward. As my friend Frank Elderson, who's on the board of the European Central Bank, says, the past can no longer be a guide to the future. The future is going to be very, very different. Well, we need to plan to take advantage, to be ahead of that future, to ensure our economies and our societies are prepared. Otherwise, our children won't have any future. If we make this transition, our children will have a future. And frankly, I've got 4 girls. I think that's important. I would like them to have some kind of future, which is a tough thing to see at the moment. The opportunity is immense, but we need deal flow.
Thank you.
Thank you.
Thank you, Sean. Thank you very much, Sean, for very insightful presentation and highlighting where we are today, but also what are the challenges that are in front of us. So, Helena, let me start with you. So, Sean had a slide that showed these multiple taxonomies. And I think somewhere I read that we have right now working or have established more than 50 taxonomies around the world, right? How many are enough? So why do we need all these many taxonomies?
Yes, let's start by, and thank you very much, and good afternoon to everyone. Let's start a little bit with the basics, yeah? Like a little like the story of the taxonomy, at least of the EU taxonomy. You've seen on the slides, Sean has mentioned there are X number, I forgot about the figure, of green assets, yeah? For the past years, we kept on hearing X, the green finance market is blah, blah, blah billion of assets under management. The green bond market is 1 trillion of assets, and so forth. But how do we know that it's really green? How could we count that when everyone had a different methodology? When there are so many diverging views of what green is? I even seen in a fund, what it's called green coal. So the idea behind it at the very beginning of the taxonomy was like, we must just, put some order in the market, yeah? And what we need is a common language, a common understanding of what is sustainable, yeah? A little bit like what happened with food products. if you want to market your product as low fat, the minimum you can ask is how much fat it's got and whether or not that is too much. And because the majority of us, we don't know what it is too much fat in a product, what do we need? We need the science to tell us what that figure is, right? How many grams should be. And that's what we have in food products. And the taxonomy doesn't force anyone to invest on A or B. Just if you market your product as having environmental characteristics or an environmental objective, tell us how much is green, and to tell us that, we developed the taxonomy. Now, going a little bit more on the details, and of course, when you examine the taxonomy and the ecosystem around it, you realize that the taxonomy is much, much more than that. That was just the little origin, because the taxonomy is actually a guide for the transition. The taxonomy is the shopping list of the future, that 2050 carbon neutral economy. The taxonomy is first and foremost, and I hope if there's one message from me today to you, is that the main purpose of the taxonomy is to allow companies and other economic actors to access better capital and hopefully cheaper capital. And that's the purpose of the taxonomy. But before we get there, let me very quickly explain what we did in Europe with the taxonomy. So as Sean said, that shopping list, right? So what we did is say, okay, how does that European economy of 2050 look like, right? And what are the activities that are maybe today are not yet, carbon neutral, but they are fundamental and for which there are no technological solution. So on those activities, we look at the best performing, what's la crème de la crème of those technologies, and we call those transitional activities. Then we looked at those who are almost there, They're low carbon, they're almost green, and we call them the low carbon, the green ones. And then we said, well, there are also other activities, those products, services, and technologies that are fundamental for the rest of the sectors, for society to transition, but also they are key, generally speaking, on the value chain of the other activities. For example, the batteries, For example, the turbines, for wind energy, and so forth. So we categorize those three types of activities, and then we had our shopping list. And the purpose is that for companies to guide, as I said, on their transition and to help them to access capital, but also very helpful for financial products, financial instruments, so they can report what's the degree of sustainability of those products. And finally, what it actually we did not envision when we start working on the taxonomy, but we have to admit that the COVID crisis and the whole discussion in Europe on the recovery funds put it on the table, which was like, well, now that we're going to deploy all those funds, shouldn't they be also, on the right direction, setting up the right direction? So the taxonomy has been used as a reference and has become the reference of what is sustainable or what we should aspire to.
Back to you in a little bit on the taxonomy part, but let me go over to you, Rula. So now we know that Sean mentioned that we need 5 trillion every year from 2025 in order to achieve net zero, decarbonize the economy. Which role does the financial institution and banks play in this transition?
Thank you. Thank you, Shergil, and thank you everyone for being here today. So, financial institutions play a very important and major, a broad role in helping in transition to the climate change. So we issue green bonds, and those are really a main tool for funding this transition. And then, we use the proceeds to finance all these projects. And we at FAB have seen that the impact evident as we have financed the development of solar plants, green buildings, and wastewater plants. And we have seen we avoided actually the emissions by approximately 2 million tons of carbon emission a year. So, and our role expands beyond just issuing these bonds, but also into channeling the capital into all these projects, the green and transition projects. So FI really have a major role. So we can also, we're a major force to impact and influence our clients, and help them in their transition. As lending thresholds become more and more stringent, some of our clients might actually become unbankable. So it is in our favor to make sure that our clients are served well and that they remain bankable. And so we help them in that front as well. The banks as well tend to keep capital away from carbon-intensive projects, and there are some FIs who have already set targets for Scope 3 emissions and also emissions intensity. And FIs can also be a great catalyst as a responsible lender, right? So we follow policies and principles that has the environmental and social risks and monitor that, such as the Equator Principle or the IFC performance standards, and also encourage our clients to meet heightened standards of reporting and disclosures, so that we ensure that they also have access to capital in the capital markets as well. And last but not least, I think what we should also be doing is try to develop the carbon markets too. So, and that's through financing maybe the more relevant instruments that are relevant to the carbon credit, and also, or maybe engage in the carbon trading itself one day.
Thank you, Rula. So, Sean, I just want to connect some of the dots here, right? Helena started by saying that we have these taxonomies which are setting the guidelines for how we can transition. Rula speaking about how the banks are willing to support. You mentioned that there's a lot of capital available out there, but yet we have seen probably one of the worst summers from a climate perspective, right? We saw the flooding in Pakistan, we saw the heat waves across Europe. So why aren't we not able to connect these things and avoid those challenges? What is missing?
The impacts you're seeing now as a result of emissions we put into the atmosphere 30 years ago, because there's a latency effect. Now just imagine we put in more emissions in the last 30 years than in the previous 150 years. Even if we stop emissions cold tomorrow morning, it's going to get much worse for the next 30 years. That's the first point to make. We're humans. We tend to deal with paying the mortgage and getting the kids to school, or getting the economy back together after a pandemic. This is a long-term abstract idea. It's hard. It's particularly hard for our political leaders who are dealing with making sure we can get the kids to school in the morning. And that's the disjunction. That's the problem with long-term challenges. I'm not saying that as an excuse. I'm just saying that as a description. Of course, that's exactly the problem with the human society at the moment. We haven't been thinking 30 years and 50 years ahead enough. That does need to change. I see the beginnings of that change in the institutional investment community, which are pension funds and insurance funds and sovereign wealth funds who have a mandate to get returns for 30 years, so that when you retire, finally, you can get a pension. And by building in, like central banks, by building in a mandate with a long-term perspective, we are creating institutions to balance out the short-termism that is a problem in society. But it's slow. The supertanker is turning very slowly. Clearly, it's not turning fast enough. We've been having these COPs now since 1990, or thereabouts, and we keep talking about it. On the other hand, there are green shoots. So, I guess I'm sharing a frustration. But I'm also saying finance has started moving. Those institutional investors are saying they want to change. Look at the investment portfolio of the Abu Dhabi Sovereign Wealth Fund, which has changed dramatically in the last few years, and other sovereign wealth funds, the Norwegian Sovereign Wealth Fund. Look at the portfolios of the Japan Public Sector Investment Fund, the largest pension fund in the world, and how they have gone towards climate. That is hope.
Yep.
That gives us reason for hope. Of course, we now need to feed them projects, and we need to help the governor of Lagos, the governor of Jakarta, to be able to get their planning together, to be able to get their... Lagos is a city of 20 plus million. It has one railway line, the same as Dubai. It's a huge place, it's chaotic. It means traffic's bad, it means pollution is bad, and they're using petrol. They need 60 metro lines. How can we construct the financial to be able to do it? There are lots of clues. Japan, Hong Kong have done this, but we need to take those models to them and help the governor of Lagos with the financing to get it. So, in a way, what I'm saying is we've spent too long on trying to come up with international agreements and not realizing there are other options available to us, which is how we build infrastructure, just greening it, how we build our cities, just greening it. We need to learn from the last 200 years. How did we build the cities we have? It wasn't through international agreements. We built them through infrastructure decision-making, public policy determining the right kind of bridges and buildings. That's what we have to do here. And that gives me hope, even though we are very late to the party, very late. I like to say, now that we know the solution, which is very clear, at every booth around here, you'll hear people talking about climate finance and blended finance. That's a start. We now need to move at warp speed. We've got to get to 5 trillion a year fast. There's a long agenda there. I won't go to the details. I'm just trying to say we have every right to be angry because we have failed so badly in the last 30 years. We have some right to be hopeful because the money is beginning to move, but it only works if everyone, including the banks, including the regulators, act really fast. And that's the test of whether we're going to have a future for our kids. I'll stop there.
Thank you, Sean. Helena, Sean came with some very good examples of things that could move, so learnings from metros in Japan, etc., to other places where this is needed. But linking it to the taxonomy part, so how can taxonomies help the corporates, right? At this COP, we've heard the term public and private collaboration a lot, right? That you need that collaboration. But how will taxonomies actually help the businesses flourish from this perspective?
Thank you. After Sean's speech, mine is going to be very technical and more down to earth.
Less emotional, I guess.
Let me go back to where I was explaining before. I was saying the taxonomy regulation, and I'm going to speak about the European example as a means, as a way of explaining how it works. Doesn't oblige anyone to invest on A or B. In fact, the only obligation attached to it is one of reporting. And when it comes to corporates, it obliges companies, starting from 1st of January this year, coming this 2023, to disclose the percentage of revenues, which are generated from taxonomy-aligned activities, the percentage of CapEx, capital investments, generated, that are going to taxonomy-aligned activities or to activities or assets to transform them in order to be taxonomy-aligned. And then operational expenditures, yeah? But we're going to leave operational expenditures to aside for the purposes of being much more simple. Now, when a company has to go through all its balance sheet, through all its assets, and start looking at whether or not they comply with the technical criteria of the taxonomy, it's almost like going to imagine that all of a sudden they tell you, you have to go to the doctor, but not the, like the generalist. You have to go to all the potential, doctors for every single part of your body, and you need to get a text, like a checkout. And that's exactly what the taxonomy is. It's a full-on checkout of all the assets. Because until now, the whole green finance market has always been top-down. It's the average, we take the KPIs where the average performance of the company, right? So carbon intensity is 200 grams of CO2 per kilowatt. Now it's bottom up. You have to go plant by plant, activity by activity, and check whether or not the companies that we have discussed, that we had long discussions with in Europe, they said at the beginning was a massive work, yeah? It is some work at the beginning, short-term pains for long-term gains. But then they realized how much they were learning about and how much it was helping them to identify which assets, which plants, they had to upgrade them. They might have to incorporate, I don't know, change the waste management system. Maybe, like invest for the retrofitting of that plant and so forth. And that is one of the biggest values of the taxonomy. It really guides companies not only to plan that transition, but also to direct their capital investments. Now, Sean said something very important around the infrastructure, all those projects and investments. Well, think about it. We have 28 years to reach net zero. How many infrastructure investments have a life cycle much longer than 28 years? So that means that all the investments today need to take into account the economic life of those investments and think they need to be fit for purpose. Otherwise, they're going to have to reinvest, pay double, in order to make them fit for purpose. That's what the taxonomy helps you, because it already tells you what's the best you can do today. Now, if you allow me to go back to the reporting requirements, yes? So companies have to say revenues alignment, CapEx alignment. The interesting thing is that imagine a company, let's make it very simple, an example. You have a utility company, it has 2 plants, 2 power plants. Let's say none of them meet the criteria of the taxonomy, which is the famous 100 grams of CO2 equivalent per kilowatt, yeah? But the company is very conscious about, carbon pricing, is very conscious about it has to transform, is very conscious about how the market is changing, so has developed a transition plan and says, for the next 5 years, I'm going to upgrade my first plant and I'm going to put it up to speed, to reach that 100 grams. Because the taxonomy is technological neutral. That means that as long as you meet the 100 grams, we're not telling you exactly, how to. You just need to meet the criteria. And that plan, that CapEx plan, means that all the investments and funding that goes into that, they have the label of taxonomy alignment. And that means that all the financial instruments linked to that have the label of taxonomy alignment. And we've seen how much the demand for green bonds, for green funds, are growing in Europe. In fact, today, the ESG market and the green market in Europe is 0.5%. 50% of all the assets under management in Europe are either ESG or green. So you can start seeing how much will be the demand.
Thank you, Helena. Rula, I would like to turn the conversation a little bit towards the MENA region, right? So what do you think is required in the coming, let's say, 2 to 3 years in order to really accelerate the green bond sustainable financing within the region?
So I think going back to my earlier points, we have to adopt policies that will channel more and more capital towards green and transition projects. So, and as we keep building our green assets, that actually gives us the support to keep issuing in green, right? And then we can gradually start substituting and having a kind of a target percentage of substituting our current assets and liabilities into a new green and climate-friendly ones. The regulatory support is really important. So, for example, the RWA, so the risk-weighted assets relief. While there are jurisdictions who have actually already implemented that, such as the EU with their capital requirements regulation 2, We still haven't seen that. So that would really encourage all issuers as well to focus on that aspect. The taxonomy, which we have been referring to as well. So, have a clear definition of what is green, what's sustainable. We really need to develop that and just make it easy for everyone, the issuers, the investors, the clients, so that all of the market is together on the same page. At FAB, we have built our capabilities over the years. But to reach, those targets, they're really huge targets, They're really huge, like us as issuers. Seeing the numbers gets us worried, So we can't really do it alone. We need more and more people participating in this. And we can't really do it alone. So we need to share the experience, collaboration experience. So whether it's a bad or a good experience. And that way, we can build a good green market, I would say, for all stakeholders.
Thank you, Rula. Sean, so what are some of the lessons? So Rula mentioned that some of the things we need are policies, aligned frameworks that will help accelerate the issuances in the region. What are the learnings from other places, regions that could get implemented in the MENA to accelerate? Do you have any recommendations, suggestions?
So we've done this in everywhere from China to Brazil to Singapore now. Some headline deals. We just need a few deals out of the way. We have the rule sets in place. We don't need to wait. That will get attention. Because, of course, what we're trying to do is to wake everyone up. In Saudi, the PIF green bond has woken up the market. That will really get stuff flowing. We would be good to see if we can get Dua to do something in Dubai, for example. They may not need the money, but the best deal to get out the door first are from people who don't necessarily need the money, but they're providing liquidity and benchmark pricing for the money.
Yeah.
So that's step one. It would be great behind that to bring together investors to call for this. We know they're there, the investors, but we haven't heard their voice. That's a way of stimulating demand. We need to provide credible transition pathways. That's where the taxonomy work and the guidance comes in, because we need to ensure that every deal meets the international and the domestic approaches. So, and then we need to start thinking about incentives and risk mitigation tools. What we essentially want to do is to make green stuff have cheaper capital. That's all. It's as crude as that. There's lots of ways we can do it. There are guarantees. There's regulatory measures by governments. If you decide to ban a certain activity, you're making the other activities better investments. Or you could provide something the Hungarian Central Bank has done, which is capital ratio relief for banks who hold green bonds on their portfolio. Well, that would get First Abu Dhabi moving. And there are lots and lots of tools. We've in fact published recently 101 ideas for the public sector to get to 1.5. A compendium of ideas. It's really 1,001, like model Arabian Nights. But we keep working that, and we will be working on that with First Abu Dhabi, we hope, on expanding the availability of ideas for our policy leaders. If we make it easy to go green, the world will shift on a dime. We just have to make it easy. Rules, financing, all of these things have got to come together. And that's what we have to do quickly, because our time is short.
And unfortunately, our session is soon coming to an end, and I think we could keep talking about this topic for a long time. But for the last, what I would like to do is one focus area, recommendation from each one of you that you think is prerequisite or necessary for us to get to those 5 trillions. What will it take? So let me start with you, Rula.
Thank you. So, as I've mentioned, we need the regulatory support. That really helps. And maybe Sean, you can speak to our regulators as well on that. Having everyone on board, working on the investors too. And also getting to that target does not only include the green bonds, but also social bonds as well, right? And we can see clearly a big gap between the green and the social bonds. I would like to talk about the social bonds, however, we run out of time. So that's another thing to help. And then educating the more and more clients as well, because if we have, so we raise funds, we have all the green funds that is necessary to give the clients, but our clients are not really ready to transition or don't believe in the cause, then really we're stuck there. So I think that's it in short.
Thank you, Rula.
You mentioned that you were going to develop a taxonomy. If I had a suggestion to make.
I think you need to take this one.
You mentioned before that you are going to develop a taxonomy. To have a taxonomy is great. It's a reference point, yeah? But without that regulatory ecosystem around it, it doesn't give you that power to really mobilize capital. Unfortunately, we didn't have time to go into all the different steps, yeah? But it's not only companies, non-financial companies that have to report, it's also the banks. It's also the insurance. And they have a lot of pressure to increase that green asset ratio. That means that percentage of taxonomy aligned activities, whether revenues or cap. It goes further. All financial products that I said it was half of the market already in Europe that claim to have environmental characteristics or an environmental objective also have to report. But it goes one step further. Now it's by law, in the retail market, anytime you want to invest, they have your advisor or the bank has to ask you whether or not you have sustainability preference. And if you say yes and you say green, then they can only show you products with environmental, characteristics, environmental objectives. And guess what is the key variable for that? The taxonomy. So build the framework, build the taxonomy, and then the whole ecosystem to really make it, maximize its power to mobilize capital.
Every country, every corporation of any size, and every investor now needs a sustainable finance action plan. We're at that point in history. Everyone can do it. There's an understanding of what we need to do. It needs to include guidance, not just on mitigation, but on adaptation and the social, as you say, which is, by the way, about getting our societies more resilient to survive the shocks we're going to get every year. That's what social is fundamentally about. That includes clear identification of what we're going to do with our asset base to make it future fit, transition plans. Governments need to bring in incentives in their sustainable finance action plans. But the main lesson is, if you haven't got a sustainable finance action plan that is consistent with our 2030 targets, as well as our 2050 targets, you're being negligent. You're being negligent and you're missing the chance to deliver the future that we need for our children.
Thank you. Thank you so much, Sean. Thank you, everyone. I will just try to summarize the discussion we've had, and I'm not sure I'll be able to do justice to this great discussion, but we require 5 trillion every year from now on in order to decarbonize. It was highlighted that the capital is available for us, but we need to accelerate now to get there. But in order to accelerate from a regional perspective, what is really required is the regulatory framework and establish the regulatory ecosystem in order for us to get there. So I think that is some very concrete and specific actions that we need to do, but also how the corporations can actually start implementing and adopting taxonomies that defines that what is green and what is what's going to help us in order to decarbonize. Thank you very much, Sean, Helena, Rula, for taking the time and having this great discussion. Really appreciate this. And I wish you and everyone a great COP. Thank you.